great to speak about a topic that's red hot right now. So this is right at the front of the industry agenda for 2022. As Lucy said, my name is Chris Watts. I'm your moderator for today. I'm also co-founder for Margin Tonic. We are a specialist consultancy focused on collateral, post-trade, and a growing set of other domains. We provide high-quality advisory, transformation, education, and operational services. So it's probably worth saying for UMR, I'm one of the lucky bunch that's been heavily involved in all 5 phases so far. Not something that was ever on my bucket list as a small boy, but nevertheless very helpful for sessions such as this. Let's set the scene for today's webinar. We are well and truly into the final countdown for UMR Phase 6. So if my maths is right, we've got less than 7 calendar months until go live, about 29 weeks, 145 working days. So the story's clear. There's not much time at all. In the UK, I think we'd actually say we're in squeaky bum territory. Now, I'm not sure how well that translates across the rest of the world, but things are getting a little bit nervy, shall we say. We hope the majority of firms clearly are in good shape already and progressing through their readiness programs. But reality is life's not perfect. Inevitably, there will be a tail of firms who feel like they're behind in their planning. Based on Phase 5, we know there'll be firms out there that haven't really started their readiness for Phase 6 as yet. And hopefully that's where we can help a little bit today. Today's webinar is all about practical advice and solutions to help firms really accelerate their compliance readiness through the home stretch, as well as making the right decisions along the way, which can be a challenge. We've got a great panel here to help me out and talk you guys through some of those themes, lots of relevant experience. Time for me to introduce you to them all. So maybe Amy, we kick off with yourself.
Thank you, Chris, and thank you very much to State Street for welcoming me to this event. I am delighted to be here. We in the States might say we're getting down to the wire, or with the Super Bowl this weekend, I was just trying to think of a Super Bowl analogy. I'm probably nearing the end zone. That might be one that Wayne would appreciate with his football love as well. But I'm the head of collateral initiatives at ISDA. I've been here since March 2019. My prior experience is with an infrastructure provider that built out automated settlement and reporting services. And also prior to that, I was with a buy-side firm where I worked on derivatives regulatory reform. In full disclosure, I was a client of State Street's, but it's been a long time since those. In addition to assisting members and their counterparties prepare as well as possible for this upcoming September UMR implementation, I also work on industry-wide collateral management efficiencies and data standards. So we're happy to be here for UMR, and we're also excited for what's out there post-UMR.
Thank you, Amy. Good to see you. Maybe Olivia, if you go next.
Sure. Thanks, Chris. Thanks, Amy. Good morning, good afternoon, and good evening to all. My name is Olivia Moy. I'm head of product strategy at State Street for the Collateral Plus program. My experiences have cut across the collateral management industry as well as OTC derivatives for the past 20 plus years. With various backgrounds in sell side and experiences on sell side and buy side firms as well. Here at State Street, we offer a bunch of collateral services to help you with your UMR needs. And we'll talk a little bit more about that a little bit later. Thank you.
Lovely. Thanks, Olivia. And over to you, Cassie.
All right. Thanks, Chris. Hi, everyone. My name is Cassandra Jones, or Cassie, and I lead our repo and collateral sales teams for EMEA within our State Street Global Markets division. I've worked throughout several roles at State Street, particularly in global markets, mainly supporting the build out of our centralized funding and collateral desks, before I moved to London to head up our global expansion of our repo products. I've been involved with UMR for the past few years, making sure that our clients are ready for the new impending regulations and making sure that our clients know how State Street can support them in their compliance needs.
Awesome. Thank you, Cassie. And last but not least, Wayne Forsyth.
Thanks, Chris. Hi, good morning and good afternoon to everyone. Again, I'm Wayne Forsyth. I'm head of client services and relationship management within Collateral Plus. And I am, at this juncture, I'm 20 plus years, we'll just leave it at that, with State Street, with the last 14 all involved in various aspects of collateral management. Within this particular UMR space, we've been heavily involved in supporting our clients who went live with Phase 5. So we had a number of firms that did find themselves swept in with Phase 5 this past September. So we, over the last year and a half, have been very actively working with our clients, helping them to implement. But then as we look ahead to Phase 6, we've also had, probably at this point now, hundreds of conversations, it feels like, with different firms across the industry, just trying to help them evaluate where they are and what services we can potentially help them with. And so what we're hoping today through this webinar is that we can impart some words of experience or potentially give you some solutions that could help you along that journey.
All good. Thanks, Wayne, and thanks, guys. Yes, lots and lots of relevant experience on our panel today. Let's get stuck in, because I feel like we should probably do a small bit of context setting at the start here, just around what Phase 6 looks like in terms of scope, maybe some of the counterparty volumes. Amy, as our ISDA lead, it feels like you'd be in a good place to help us out there.
Well, I'm fortunate that before I joined ISDA, my colleagues who are here surveyed our sell-side membership. And so hopefully we can move on to the next slide and give a perspective. This is available on our Margin Info Hub in case folks want to look at it a little more detailed. And it does include our survey results for Phase 5. And then once Phase 6 was added by the regulators, then it was broken down even more. Now you may be saying, why does she have Phase 5 here? That was so last year. Well, it's important to recognize that some of these counterparties, 314 and 3,600 relationships, because of the initial margin threshold, so right, you start off with your ANA calculation, how much gross notional you have. Were you in 50 billion, or maybe now in Phase 6, you're in 8 billion, but then you look at your counterparty relationships. How much of that expected initial margin is below 50 million or above 50 million from September 1st going forward? And that can help you prioritize. We're going to be talking a lot about things that have to be done right away, but you also need to pace yourself a bit. If you have relationships that you expect to be well below $50 million in initial margin, I say dollars, euros, sorry, it's similar with US. I'm sorry to be US centric, I apologize. Just rolls off the tongue. But you can prioritize. Now the other part is, you might say, well, wait a minute, there's some firms here or counterparty relationships in Phase 5 that were well below 50 million. Yes, and they're still working on this, and you're competing for resources. So I want to give you a positive view that you can use the initial margin threshold as a way to prioritize your rollout and your project, which will not end on September 1st, but you also need to realize you're competing against that tail of Phase 5. So with all of that, hope that sheds some scope, is that if you're listening to this in your Phase 6, you're likely one of 775 counterparties and one of 5,443 relationships. So you're in a group, a nice big group, the biggest group ever in UMR, and there's a lot to be done.
Very good. You make it nicely sound like a big team play, Amy, albeit with some slightly scary numbers involved. Let's why don't we sort of take that as a nice context setter and maybe move on to what does this mean in terms of execution? So conscious that we've talked a lot about the limited time. We won't keep drumming home that same message. Maybe we will, actually. But there's limited time. But also we want to come back to the practicalities of compliance. So slide that we put together here from a tonic perspective just gives an example, very high level approach of what an initial margin change program might look like. So just to talk you guys through, again, at a reasonably high level, 2 key phases involved in a program. We've got scope analysis and education and execution. We all want to be over here on the right-hand side as quickly as humanly possible. And the hope is that there's a good chunk of our phase 6 firms who are already here, right? They're already defining and delivering compliance solutions and change. Having said that, we're conscious that this front piece of work is absolutely mandatory before we go into execution. So let's just focus on a couple of these steps in a bit more detail. I think Amy's already mentioned the first step of compliance, which is really confirming entity scope via the ANA calculation. ANA, simplistically, gross notional trade portfolio calculation across all OTC uncleared derivatives. It is a parent group calculation. If you have a selection of funds, you could perform that calc at fund level based on certain criteria. It's also worth saying the regulatory ANA calc period is pending. It's just around the corner. So it's March to May this year for the vast majority of jurisdictions. So I guess where no one wants to be is finding out at the end of May or the start of June that they're actually over that 8 billion and therefore in scope and have a matter of months, the summer only, to get completely ready, which just isn't enough time, bearing in mind the queues that Amy's already started to talk about. So I guess our advice would be that ANA-wise, get out there nice and early today if you haven't already, to ensure you perform those calcs. There is some complexity there as well. There's jurisdictional differences. Data consolidation can be a real pain, especially for the multi-managed funds. You could lean on providers such as State Street. They've got an ANA service. Likewise, we have at Margin Tonic. Hopefully there's no conflict there, but actually performing that calc is critical. Should say in parallel, firms are going to be going through this education process. If there is any risk that you will go through that ANA threshold, firms need to really educate themselves on what are these changes, what are these solutions that I need to deliver. We typically split initial margin out into these 4 streams: calcs, ops, custodians, and legal. And it's important that firms understand the scope of each of those streams. Again, lean on providers, lean on the likes of ISDA. There's loads of good information that ISDA have. Maybe we'll touch upon that a bit later. Lean on your peers, lean on external specialists such as ourselves. And then just looping back to compliance scope, I guess one last piece before execution. Once you know that you have funds or entities in scope, you really need to understand at relationship level what that forecast exposure, whether SIM or grid, is likely to look like. Amy's talked about the 50 million exchange threshold already. If you have relationship which zooms through, you can't avoid the full set of change that we show here on the right-hand side. However, Amy also talked about lower exposure relationships. And if they stay though in the long term, that's potentially an opportunity to reduce your compliance scope. So again, getting that view by leaning on your SIM grid vendors and service partners is going to be critical to locking in your scope and your compliance planning. And then we can come on to, I guess, the more positive side, which is actually driving all this change home through definition, choosing of solutions, and ultimately execution. And again, similar themes here, leaning on existing partners is going to be a big part of the play for firms that find themselves behind the curves. An obvious way, I guess, to accelerate that delivery. I won't go into the weeds of the different changes because I'm sure we'll start to cover that off as we move through the webinar. Just worth mentioning as well that counterparty objectives are pretty consistent, I would say, across the board for phase 6. It's all about acceleration. No one wants their trading patterns interrupted, but certainly firms looking to do this in as cost-efficient way as possible. Amy, I don't know whether you've got anything else to add there based on what you're seeing on the ground.
Sure, I'd like to just highlight some of the summary of the key initial margin changes. I mean, hopefully folks on the call have been a bit aware, but it's not a bad thing to just reinforce. First, that you must calculate initial margin either using the regulatory prescribed schedule or grid, or a standardized initial margin methodology. And ISDA, with its members, have developed such a methodology. Next, it must be calculated on a daily basis. And remember the years and years and years ago when you might do a variation margin call like once a week or once a month? Well, you need to do initial margin similar to how you're doing variation margin on a daily basis. Of course, if it with a minimum transfer amount, you're not sending $237 every day. And initial margin is two-way or gross. It's not like variation margin, which is one way or net. So both you will be paying your counterparty and your counterparty will paying you. The eligible collateral and haircuts, the minimum standards are prescribed by regulators. So you and your counterparty may want to adjust haircuts or may not want to accept cash or may not want to accept equities of some sort out of some type of credit rating that is allowed, but you can't post or receive just anything you wish. And you can't just negotiate your haircuts. You really have to look at those prescribed elements. And then the last part, which I know is a highlighted topic for today for sure, is initial margin must be segregated. So I can't post directly to Chris, and Chris can't post directly to me. It means that each pledger will choose their custodian to pledge from. And so you may be receiving via a tri-party or a third-party custodian that you've never had a relationship with before. And that adds to documentation and operational requirements. So I know State Street will get into much more on those details, but those are the key 4 changes that I really kind of balance down to all of our resources available at ISDA.
Lovely. Thank you, Amy. Yes, I think that puts us in a good place. We've talked about the ANA scope. We've talked a little bit about the changes, execution approach, but now it's probably a good time to start talking about dates and deadlines. I think is really the focus for all of us over coming months. I guess we're well into the home stretch, as we've mentioned lots of times, and we'll see how many different words we can find to say home stretch over the next 40 minutes. But specifically for phase 6, let's ask about the key readiness dates. What's in line going forwards? And Olivia, do you maybe want to help us out with this one?
Sure, Chris. Thank you. So really, as Chris mentioned, we're going to try to figure out how many different ways we can say your timeline is really minimal at this point. At State Street, we have, in partnership with ISDA, have distributed our deadlines for UMR Phase 6 readiness. One of our first deadlines is March 31st of this year. And what that means is that we are looking for potential clients, collateral pledgers, and providers to identify their scope of services with us. The number of pairings and legal entities are also in scope, and to potentially have executed fee schedules ready by that time. And what this is really gets you into place in terms of the State Street implementation and onboarding pipeline. And so this confirms your mandate and willingness to work with State Street as your collateral administrator or agent or custodial agents as well, either third party or tri services. And then it allows us to secure your place in that pipeline for us to get started and initiate the onboarding exercises that we would need to take with you. Our next deadline is June 6th, and that's where we are looking to have all executed legal documentation with you and given back to us. So this means fully executed documentation between yourselves and your counterparty if you're signing up for it with us on your collateral administrative services side. This will allow us to set up your documentation to help you with the outsourcing services of collateral, the day-to-day collateral management, as well as either the calculation for UMR as well. We're also on the tri-party and third-party side. We're looking for your custodial agreements with us, so fully executed documentation around the custodial agreements, as well as your account control agreements, as well as the eligible collateral schedules. Once we receive this allows us to start the onboarding and account setup process for your accounts. It also allows us to identify the onboarding efforts in terms of what are your reporting needs, and also it secures your testing windows as well. And then everyone, as we mentioned, everyone is very well aware for September 1st, it is go live. At the bottom part of their screen, you'll see that we've kind of grouped in some months in terms of readiness that you would need to be advised of. So from now to March, we're saying that you really need to finalize your process in thinking about what services that you need that are appropriate to you, whether it's collateral administration, SIM or grid calculations, third-party or tri-party segregation. Between April and June, we are looking at, again, the initiation of the onboarding and implementation efforts. So where we would have to perform with you AML and KYC checks where applicable, securing the testing windows, as I mentioned before. So, one thing that we've all mentioned is that once you decide to move forward, you are competing with other parties that are in scope for phase 6 for a bit of that testing window and runway. So we understand that we're trying to do this in parallel at the same time as well. We're moving forward in terms of the onboarding efforts. And so this shouldn't be taken lightly in terms of the testing windows. I can't stress enough, and also through experience, that testing, even though as much as you plan throughout your process, there's always things that come up. So you should account for those, kind of unknown scenarios if you haven't thought about it. And then again, we are also looking for the executed documentation for account opening and reporting setups for us to initiate. And then between the period of June and August, this is where we're finalizing that implementation phase. There's a constant movement and interactions about the statuses of your accounts in terms of the onboarding exercise. And so we are really, there's a lot of, I'll say, bilateral communication between ourselves and yourselves in terms of, the statuses of accounts, where we are in terms of setups, reporting, user agreements, so establishing user access rights, et cetera, et cetera. And then what we also want to make you aware of is that if we receive anything after the June 6th deadline, we will try and put our best efforts forward to get you up and running before September 1st.
Fantastic. Thank you, Olivia. Nice to see, I guess, on one hand, a very measurable set of targets over coming months, with clear scope for each. Maybe, a little bit scary for those that feel like they're behind the curve on the call. I think we can help there, though. I think we want to probably talk about a couple of related areas now. It'd be great to talk about some of the challenges and obstacles that firms can expect to go through over coming months. But then on the flip side, we'd like to be more positive, and we'd like to focus on the solutions that are out there and how specifically players, including State Street, can help firms accelerate their own deliveries. But let's start with the challenges. I guess there's a lot of hands-on experience amongst the panelists for UMR deliveries. Amy, maybe worth starting with you, bearing in mind your industry view. What are the key challenges you see ahead for Phase 6 firms? And are there lessons learned that those firms can leverage from previous phases?
there certainly are some lessons learned, and thankfully there are a good deal of resources, and a few slides coming up will show some of those for you, so you don't have to jot them down as I write them, as I mention them. But some of the challenges that are going to be in phase 6 that previous phases may not have seen, or phase 5 maybe a little bit. One is around consolidated groups and affiliates. And certainly earlier phases had consolidated groups in the banking entities, but not as much as, say, with insurance companies or with end users that might have subsidiaries and affiliates. You need to calculate those ANA numbers and the initial margin thresholds on that consolidated basis. Now, something that started in phase 5, maybe there was 1 or 2 in phase 4, but mostly phase 5, is separately managed accounts. And some of you may be nodding your heads. Maybe a pension fund that has multiple investment managers. You need to calculate your ANA and your initial margin threshold at that top legal entity level, and then allocate those initial margin thresholds to those investment managers. And so that's something that is a challenge that is more challenging for phase 6, because there's more entities that are going to be encountering that. So the client communication, whether you're in an asset manager speaking to end clients, or if you're an end client, you should be speaking with your asset managers. I also wanted to mention something that probably wasn't as much of an issue in, say, phases 1 through 4 as in phase 5. We talked about the tail, or using the initial margin thresholds as a way to prioritize documentation and onboarding with counterparties or custodians post September 1st. If you're going to do that, you also need to be really, really clear with your front office that they have to pay attention to these numbers. They have to be watching them carefully. You don't want to be September 3rd and all of a sudden be over that threshold and have to halt trading with a specific counterparty. So there's a lot of work that needs to be done ahead of time with training of your front office, if they haven't already. Not to presume that you haven't done that, but if you haven't, we heard in early September of phase 5, there were some instances of minor panic because of that lack of training. So we want to pass along that lesson learned. I think that's all I have for you. Yeah.
Very good, very good. Yes, nice and polite, but strong messages. Wayne and Cassie, really keen to get you involved. You must have seen some of these challenges hands-on at State Street, particularly within phase 5 and maybe already at phase 6. Cassie, do you want to pick this one up?
Yeah, sure. Amy touched on some really good points, and particularly touching on some points of how initial margin is different, presents challenges as well. So initial margin being posted 2 ways, particularly there's more non-cash collateral being posted, and the accounts need to be segregated. This presents documentation challenges and operational challenges. So the documentation front is certainly most obvious. There's many clients that are already fatigued with the CSA negotiations, and now you have to consider making sure your documentation is in place with your service providers, your segregation providers. You need to decide whether you're taking a third party or a tri-party approach to the segregated accounts, and then establishing all of that documentation by mid-year. Additionally, because IM is 2 ways, the pledging party may choose a different segregation model or both. So that complicates not only the documentation, but the collateral movements. And I touched on non-cash collateral also being a bit of a challenge. When we think about variation margin implementation, a large chunk of the movements were in cash. And with initial margin and the rise of non-cash exchanges, clients need to make sure that there's a robust disputes and valuations process in place. So that's another challenge that we're seeing clients be faced with. And I guess lastly, you can't underestimate the data challenges, of course. Particularly with the calculations of initial margin, there's a lot more data fields that are required. So with the SIM and grid models, you need to make sure that you know where the data is not only being sourced, but how it's being mapped. So we're seeing many cases where clients can't just rely on their custodians to have everything in place. The data then needs to be enriched or mapped further to tag things as cleared, to tag the right in-scope transactions, and make sure that the format's in a ready appropriate format for consumption. So, a lot of things to consider and a lot of challenges to face. But Chris, you mentioned this, the main providers have been through this with a lot of clients before. So we're certainly here to help guide clients through the process and make sure to leverage all of the materials that are out there as well.
Lovely. Thank you, Cassie. I think we're already starting to go into solution territory. You guys are giving some helpful steers to the audience. Maybe we formalize this a little bit more and talk explicitly about some of those phase 6 solutions that are going to help firms get over the line as quickly as possible, including those offered by State Street. There's a consideration there as well of monitoring repaper relationships. Olivia, do you want to maybe introduce us to some of those phase 6 solutions?
Sure, Chris. So at State Street, our Collateral Plus program offers a variety of modular services and solutions. One of them being is to manage your operational workflow, and that is our collateral administration service. This is really an end-to-end multi-product processing. So what that means is it's able to handle a variety of products to meet your IM calculation requirements. And it really takes your burden of establishing an operational day-to-day process around initial margin calculations, portfolio reconciliations, the interactions with your counterparties on a daily basis, and outsources it to State Street to manage on your behalf. This will really be, is similar to what you may know as your variation margin operations, but it's reestablishing that for your initial margin, as well as the UMR calculation services that we offer. So as we mentioned, there's the SIM and grid calculation services that we can perform on your behalf. And we also take care of the initial margin dispute management workflow as well. We would interact with your counterparties in terms of establishing any discrepancies and then reporting them back into the collateral administration services where applicable. The other portion, or what we typically call in the industry, is collateral segregation, or the below the line process, is where you would need to determine your custodian of choice and what model makes sense for you. So there are two models that are really out there that are differentiators, which is the tri-party and third-party models. You may have heard of these terms before. So let me just go a little bit through the process of what a tri-party service model entails at a very high level. So a third-party service model is similar to how you are established for VM. It's kind of aligned with the bilateral operational process, and it allows for you to make the choice and selection of the collateral that you're looking to segregate based on your eligible collateral schedules determined between yourselves and your counterparty. As well as it allows you to have control over that process and make your own funding choices in those accounts. On the tri-party side, it's a more robust kind of process where it introduces the concept of a long box in which you would fund based on your eligible collateral. And it's like a set it and forget it type of operations where you would fund that long box with eligible collateral, and that tri-party agent would then move collateral into a segregated account based on criteria that was established during your onboarding process with your tri-party agents. The collateral that gets moved into that account is based on what we call RQV messages, or required value amount messages, which is the agreements between yourselves and your counterparty on the collateral to move into a segregated account. Now, at the time of onboarding, when I say it's a set it and forget it, meaning that you apply your eligible collateral criteria with your tri-party agents. We We then, as a tri-party agent, would then apply the rule sets to each individual segregated account. And then we would perform optimization needs in terms of how we would value the loan box and segregate the assets into the segregated account. So this is a more robust process where you're allowing your tri-party agent to act on your behalf in terms of the collateral movements. At State Street, we also offer a number of reporting and dashboards. You will get access to a portal. So, for example, if you sign up for multiple of our services, it will give you kind of a one-stop shop of your collateral reporting and dashboard needs. So, if you are a collateral administrator client, as well as either a third-party or tri-party client, you would be able to see and view the day-to-day's activity. I'll take a pause there.
Wayne, can you hear us?
Yes, Chris. I think Olivia covered this well, and maybe putting a couple of thoughts together, kind of just thinking through again challenges and how the challenges play through into the end-to-end flow here. Again, I think it is. I think it is important to understand that every firm has nuance to it. So as you think about your end-to-end flow, remember there's going to be interdependencies there. So as you think about your UMR services, again, this is touching all aspects of your organization. It's touching legal, it's touching your operations, certainly touching your IT. And all of this is going to play into these different elements that Olivia very eloquently went through. So when we think about the SIM and grid calculation, for example, you need to think about the trade data and the importance of that data feeding into that process. Because again, this is not your variation margin data. This is going to be a much more robust and detailed type of data to calculate. So you have to think about that. The legal agreements feed in because again, these eligible collateral schedules, to Olivia's point, they need to be in place. So all of these things are very, very important. And finally, again, the entity structures are then very correlated to how you're going to be setting up your segregated relationships, so the segregated collateral accounts that Olivia was talking about. So I guess if our theme, again, you have to start as quickly as you can, but remember those touch points. And, again, as your partner, we would try to work with you to help keep all of this organized and to help you progress through your execution program.
Good points, well made. So I guess where we should maybe go after going into the details of some of these solutions is there's also optimization considerations at hand here. So I hear very few people, I don't know about you guys, speaking positively about initial margin. It's incremental cost, it's incremental effort, it's a burden on resources who often have multiple reg deliveries running in parallel, as well as internal books of work. And it's not just the collateral funding costs, right? There's increased costs from service providers for the custody side, the technology side, operational costs as well. I know State Street have run a survey recently for UMR, and one of the key headlines that I saw that came out of that was around the percentage cost savings that firms thought they could make if they operated at maximum efficiency. So I think almost all firms said they could achieve collateral efficiencies of over 20%. And I think almost 40%, so almost half of firms said they think they can achieve savings of over 20% based on their total cost base today. So they're not small amounts. Be good, maybe Cassie, one for you. Be good to talk about how can firms leverage UMR to reduce their collateral cost base for the long term? Conscious of the tight timelines, but there must be techniques out there that firms can use.
Sure, thanks, Chris. And I like the way you opened that optimization is an optimistic way of looking at UMR, I guess. So let's look to the future, really. So clients have really, first of all, been scrambling just to get compliant with the regulations and really focusing on the operational aspects of collateral management. But you've touched on a great point with the UMR survey. These collateral requirements continue to build. and they have a real cost and drag on your portfolio. So clients need to be considering how they can minimize this cost drag. And I like to think of it in different layers. So there's the baseline, starting with how do we really minimize the amount of collateral that you need to post in the first place. So this would be using things like pre-trade analytics to identify how you can best trade maybe with different brokers to lower your SIM amount even before placing the trade. So this would minimize the amount of collateral you actually need to post. Also, could you be using forecasting tools to minimize the collateral buffers that you need to maintain if you have a better idea of how your future needs may arise in the collateral requirement space? And once you free up those assets and that cash, maybe you can redeploy that in a money market fund or a repo product for incremental yield. So it really comes down to either minimizing your costs or producing incremental yield with excess assets. But once you've established the margin requirement, then it's things like cheapest to deliver. How do you allocate collateral in the cheapest way possible? So here's where optimization platforms can help, optimization algorithms, or your tri-party agent can really assist here. So this will, determining your cheapest collateral possible is really about identifying your funding and opportunity costs. So this is going to be firm specific, and your providers can help you kind of determine what those costs are and how to minimize them. To effectively implement the cheapest to deliver framework, one more thing to touch on is how you get the right mix of collateral in the cheapest way possible. So this means firms really do need access to securities lending markets, repo markets, so they can access cash and the right mix of collateral in a cheap way. And in phase 6, we're really seeing the rise of firms that not be sitting on enough high quality liquid assets or HQLA to be able to post as margin. So they need to have access to collateral upgrades and downgrades to implement these collateral movements. Lastly, to touch on, we try to go from just collateral optimization to something we like to call asset optimization. So if you have a real view of your portfolio, and you see what assets are free, could you maybe identify a security trading special in securities lending and lend that out for incremental yield, as opposed to tying that up blindly in a collateral management requirement? So different ways you can maybe smartly think about your allocations there. At State Street, that's key. We're trying to really focus on centralizing the optimization solutions in one spot. So you access, securities lending, you access repo, and the pre and post trade optimization solutions all within one provider.
I think that's a really great point, Cassie, you've made there. There's no one size fits all, is there, for optimization? It's completely dependent on each firm's circumstances. And I know you guys provide that menu of services based on their needs. Wayne is keen to bring you in again. Is there anything else you want to add to that one?
Yeah, I think Cassie really covered, I think, a lot of the the proper ways of thinking about optimization when you really get into the makeup of how this correlates in with UMR. I mean, I think the reality is it's not just an optimization at an asset or a trade level, but it's an opportunity for an optimization of how you think about your collateral process in general. But I think one of the lessons, and Amy alluded to this earlier, is what is going to be post-UMR. And we do think that it is important to think about how you can utilize your tool set and how you can think about all of these different aspects that Cassie really mentioned here. So how do you make best use of your assets? And the key there is to not think of this in silos. You don't want to think about having a separate process around how you're dealing with your initial margin as opposed to your variation margin, or perhaps even how you're using your assets for other uses within the portfolio. So it's an opportunity to evaluate your tool sets, make sure that you have the ability to think about all these different aspects that Cassie mentioned and how you can incorporate that into your end-to-end process, not in silos, but at a holistic level. And again, using the tools at State Street, we'd be happy to talk with you about that.
Very good.
Chris, back to you.
Thank you, Wayne. Thank you. So I guess, look, we're into our own home stretch now. That's an awful pun, and you have to apologize. You have to accept my apologies for as much. But regardless, I think it's probably about time that we talk a little bit more about accelerators. So we've talked about the solutions. We focused on optimization a bit, but bearing in mind that there are going to be firms coming away from this call who really want to know what tactics and techniques they can use to accelerate their programs in the short term. Amy, do you mind leading us off on this one?
Sure, and if we can, oh, perfect. Read my mind about going there to that slide. So ISDA, I have to say ISDA members, the staff here, we're smart, but we're not as smart as all of our members collaboratively. But we've put together a resource that is available for both members and non-members, because we realize some of you may not be members, but we are in this together. So we have our ISDA Margin Info Hub. You can go to isda.org, and then you'll see the margin page, and there's information about documentation. There's information about ISDA SIM if you plan to be a licensee or work through an outsourcer or administrator for your initial margin calculations. You do need to sign up a license. There's no fee for Phase 5 and Phase 6 firms. But the ISDA Margin Info Hub has a wealth of information regarding ANA and self-disclosure. So once you calculate, get on the stick and tell your counterparties and tell your custodians. Also around calculating initial margins. So do you plan on using SIM or grid, and what are the pros and cons? Segregation and eligible collateral. We even have a chart by regulatory jurisdiction. I think this might have been a personal request from Wayne Forsythe to put that together, and a few other people jumped on that bandwagon. So we have a very detailed chart of all the haircuts and all the categories. And then some information about differences between tri-party and third-party, which Olivia touched on very nicely. But if you missed anything, you can go into that, and there's some checklists there. And then last but not least, we have implementation tools. So an overview of things like specifics around documentation of your custodian documentation, the different types, because you will be receiving likely from multiple tri-party providers, and if so, there are different jurisdictions you need to be considerate of, and then also checklists of really how to start your project off, or if you've already started it, which is great, we hope you have some things that can be used there. So here on this slide, we have some specific hyperlinks that you'll receive in the resources, also around dispute processing, which is important. One other element that we built out in 2020, which definitely still has a life to live for a number of years going forward, we built out a collateral management transformation toolkit. And there are 4 topics, and Cassie talked about this a little bit, and Wayne as well, of really looking at this opportunity to build out your collateral management program, things like automating your collateral settlement or onboarding custodians. You'll be onboarding custodians for segregation going forward, so you might as well kind of get that program together. Things like digitizing documentation. How can you use online negotiation tools and converting that into a digital format so you're reducing manual input when onboarding? And also portfolio reconciliation and dispute resolution. So we'll talk about it a little bit more towards the end, but really looking at how UMR is not just meeting a regulatory requirement, but driving efficiencies in operation, which can drive improvements in data quality, and that can help you make better and more efficient collateral and P&L decisions along the way. I think that's a pretty good summary without listing every single thing we have.
I think you did a good job. I think you did a very good job. Yes, and look, we use the Info Hub. Even as a consultancy, there's some really good information up there. So don't underestimate, I guess, the importance of using some of those industry artifacts. They really will help accelerate your compliance programs. Cassie, do you maybe want to give us a view on some of those accelerators that you've seen on the ground working with State Street's clients?
Sure, absolutely. And I agree, Chris, the artifacts that Amy's put forward have been really helpful for clients to guide their expectations. Seeing the movement on the ground, one of the things that has been really helping accelerate clients in their compliances, that self-disclosure piece that Amy has mentioned. So making sure that once you realize you're in scope or anywhere near in scope to the regulations, you're notifying your relevant counterparties, your custodians, et cetera. One other thing to touch on, just to keep it brief in the interest of time, making sure you're defining the scope ahead of time will help accelerate your discussions with your providers. So making sure you decide whether you're doing SIM or grid, whether you're doing third party or tri-party, are you going to do certain calculations in-house, or what needs to be outsourced to a provider. Once you have that scope, you can establish a timeline and then move things along much more quickly. So I would just touch on that point as well.
Lovely. Thank you, Cassie. And I guess probably a last question from our side. I know we've answered, I think, the one question that's coming from the group so far. But I'm a Phase 6 firm. I haven't started my Phase 6 delivery program as yet. I'm still trying to work this out. We talked a bit about accelerators, but in terms of super practical next steps or first set of steps for one of those such firms, where do they start? What advice would we give them? Something that they can take away from this call and put into action as soon as possible. Amy, Wayne, be great to hear from you both on this one. Amy, maybe we start with you.
Thank you. Once you've determined your ANA calculation and that you're in scope, then you really need to choose your custodian and custodian structure as pledgor and confirm your custodians that you'll be receiving from, because those are really going to take the most resources and runway, trying to come up with all these different analogies, visual analogies, runway for implementation. And then I also really want to stress, and I mentioned it a little bit, but to use this as an opportunity to be more efficient overall. Look at your margin call and settlement automation, streamlining custodian onboarding, portfolio reconciliation. How can you not be exchanging emails back and forth for every single document that has to be negotiated, using online and digital negotiation tools where available. If you don't have STP and these efficient improvements going into UMR, you might hit the deadline and crash the next day. It's a little bit dramatic, but it's quite possible. So good processes lead to good data, lead to good decision-making and optimization.
Very cool and well said. Wayne, any thoughts from you there?
Yeah, I'm going to continue to echo these themes here. Again, if you haven't started at this point, my opening words of advice, as Amy was saying there, is utilizing some of the tools that we've talked about today and the different resources out there in the industry. But you've got to drive engagement with all of your key constituents here. And at the top of that list is going to be your counterparties and your custodians. So, your counterparties have been through this. They've been through phases 1 through 5. And, I think it's really key that you have those conversations with them, and again, understanding you may have a prioritization that needs to take place with that. But that will start your process, so you start to get a sense of who, your counterparties and the documentation needs that you will have, as well as then being able to move on forward. Because again, onboarding, you need to understand who their custodians are as well as your own. So that's a big piece of it. The second piece, again, internally, work with your IT, work with your operations teams, or if you know that you have gaps, then you need to look at how the service providers such as the State Street can help you with the various pieces of that. Because again, the data that's required is not small, and so you need to be looking at how you're going to be able to use either the calculation of the IS-to-SIM or the grid calculations. So again, those are the really opening pieces. And again, if there's anything we can do, we're happy to work with you on that, but time is getting short at this point.
It is indeed. It is indeed. Olivia, any parting words from you?
Yes, Chris, thanks. And being part of the UMR journey for the last, I'll say, 6 or 7 years. So really before implementation started, there was a preparation period. So one of the lessons learned throughout those phases is really what Amy also touched on a little bit in terms of the onboarding and implementation exercises as a collateral receiver. And so what we've been stressing throughout this presentation is the things that you would need to think about in terms of a collateral provider. But there's also that checklist, if you will, where you as a collateral receiver would have to get engaged in the custodial onboarding efforts and exercises. So it is important to really understand what that means in terms of the legal documentation that you are executing, as well as where you are as a collateral receiver, also looking to potentially also have a testing window with those either third-party or tri-party agents, because as we mentioned, you as a collateral provider and your counterparties as a collateral provider get to choose the custodian and the segregation model type. So it is really a two-way interaction. So not all your counterparties will be utilizing the same custodians that you choose, or even the model. So those are the things that you would, in terms of your onboarding and implementation efforts and checklists, would need to consider, because that's also where the time in terms of your runway are also spent as well.
Thanks, Olivia. And look, thank you to all of our speakers. I think there's lots of great practical advice around steps that firms can follow over coming months to get over the line as quickly as possible, but importantly, in the right way, right? I think there's speed is good, but speed with control is better for sure. And hopefully we've started to share some of the options and accelerators that are out there that firms can take advantage of. I think the hour is up, so we will shut down. A load of relevant State Street contacts listed on this final slide in case you want more information about UMR in general or State Street's related services. You can see the different regional contacts that are available there. I'm sure this information will be made available post-webinar as well. But last thing from me is just to thank all of our panelists once again. Thank all the attendees. Thank you to Savvy. Thank you to State Street. And I'm sure our paths will cross again. But much appreciated, everyone. And best of luck for coming months.